The macro market first, we usually start off with talk a little bit about the market volatility, macro market, any news, headlines, and then we move into like Tesla and other stocks. And
a lot of fear, obviously, around, macro factors, particularly, inflation and kind of Fed balance sheet shrinking and what the repercussions of what that would do. So I think that's why your growth stocks in particular have been pounded so much.
Maybe when the rate hikes actually happen, then the market might actually start going up. I got to think that, we've hit some kind of local low in the macro market.
Take two names that we talk a lot about here, both Roblox and Rocket Lab. They went from all-time highs to all-time lows in a matter of like 2 months. That's clearly not based on like fundamentals. If we do kind of consolidate around here for a week or two or three, then I think it will be a bullish sign for that capital that we've talked about that's kind of sitting on the sidelines. It's a lot easier to kind of like the upside potential from here versus maybe where we were in November. I think everyone's seeing red across their personal portfolios. There was a lot of froth in like kind of crappy SPACs and like companies that didn't really have a lot of,
a lot of story stocks.
Being like, $2 to $5 billion stocks. And people just don't know much about them, but they're like, oh, this company has space in their name, or like, oh, this company says the metaverse is going to be awesome. And so it's like, right, they've got to be at least worth $1 billion. And so I think in a way, this kind of downturn will be healthy.
Moving on to Tesla.
I think we were expecting something resembling a blowout. And this quarter clearly was not that. You had kind of shrinking automotive gross margins, which was kind of a surprise. I'm coming up with like a declining FSD take rate, at least in Q4, but also kind of lower automotive gross margins on top of that, with so many more vehicles being produced in Q4 than in Q3, and with the price hikes, which had been layered in over the second half of 2021. So to see kind of declining gross margins, that was a little bit surprising to me. And
I just feel like there's a huge advantage for retail investors or individual investors like us. It's just sitting out there for us in the open for all of us to kind of pick up shares at this current valuation.
With a company like Rocket Lab, I think you have to kind of take off your financial analyst hat to some degree. Look at the market that they're in and look at their technology, look at their leadership, and kind of look at it almost more like a VC than like a normal Wall Street analyst.
I think Tesla proving out auto insurance and disrupting it in their own right for their own cars is actually good for Lemonade. Tesla can do this. Lemonade's going to be doing it too.
Even though I do think it would be in the other OEM's best interest to license FSD and let Tesla do the insurance for it as well. I don't think the agents who run those companies will come to that conclusion and actually license it.
Yeah, I mean, I think the total addressable market for Tesla is expanding. It's a $1 trillion market cap company approximately. So the chances of it going up, 3, 5, or 10x, you need those things to really come to fruition.
So I think right now, Jerome Powell's statements or sentiment seems to be that inflation risk is very real. And so you need to increase interest rates to kind of get that under wraps a little bit. Rather than try to like perfectly time the 15% bottom, I'd rather, stick with the company through that 15% drawdown, if that even is right, and stick around through like the 10x upside that we see in the next 5 to 10 years, and layer in some use of derivatives when we think there's kind of near-term catalysts to accelerate those returns.
I think it is a legitimate catalyst potential, and I don't think it's baked in.
You can probably charge $25,000 and maybe it's like a 50% take rate or something like that. Maybe the stock price will start to reflect an increase in take rate once it becomes clear that the software is getting that good. And then at that point, once more people see it, then they'll start giving a little bit of credit for robotaxi capabilities. There's a good chance the stock kind of recognizes this stuff ahead of their actual implementation.